The fattest part of your volume profile is the one place you can't make money. In a few minutes, you'll see exactly why and where the money actually is. Because a volume profile isn't a map of prices. It's a map of people, farmers, corner shops, Michelin-starred restaurants, and the professionals are never standing where you are. So, quickly, what it actually is. A volume profile is just the volume traded at every price. That's it. That's the whole definition. Not an indicator, not a signal, a record of where business got done. And the moment you stop reading it as prices and start reading it as people, the whole chart changes. Forget trading for 2 minutes. Say this is the Apple market. Down here at the bottom, the lowest price, who's standing there? Farmers, the producers. They sell at the lowest price there is because they made the thing. In the middle, this is where you do your shopping. Corner shops, supermarkets, the average price, where everybody goes. And up here at the top, Michelin-starred restaurants. Same Apple. And you pay a fortune for it. Now look at what that means. At the top, professionals. At the bottom, professionals. And in the middle, meanest ordinary people. Retail, you. But here's the thing nobody says out loud. The professionals aren't at the top and the bottom by accident. That's the entire business. Buy from the producer down here, sell to the shopper up there, or sell at the restaurant price and buy it back cheaper. And this is exactly what happens in the S&P. Same market, it's just apples with a ticker. Therefore, if you're trading in the middle, you're not competing with the market. You're buying from someone who knows more than you and selling to someone who knows more than you. Both sides of your trade are professionals. You're the shopper. Quick thing before we go on, there's a completely free academy, Basics to Advanced. Link in the description. Back to the chart. Now, don't trade in the middle is easy to say. Here's the part that made this click for me, and it's the reason most people never see it. In the middle of the profile, what does the market actually do? It buys and it sells at the same price, over and over. Not because it's confused, because everybody there is happy. Happy to pay that price, happy to sell at that price. That's what fair value means. It's fair, and that's the problem. When everyone agrees on the price, there's nothing to win, but you can't see that on a candle. This is the part one wants you to see. If you don't know what a footprint or a delta is, it's simple. It's a way of seeing the order flow. How many people are buying, how many are selling, moment by moment. Now watch a green candle in the middle of the profile. The candle's going up, so there's buying, right? Look inside it. There's almost as much selling in there as there is buying. The candle is green. The flow inside it is a coin flip. The candle is telling you a story the order flow doesn't back up. Therefore, in the middle, you don't have a bad edge. You have no edge. You have noise, dressed up as a signal, and every technique you've been taught gets applied right here. The retest, the reclaim, the bounce off the value area, all of it on data that can't answer the question. That's not a skill problem, that's a location problem. Write that down. Location before setup. So if the chart lies in the middle, there's one question left worth answering. Where does it stop lying? Watch how much time the market spends in this zone. Almost all of it. Now watch how much time it spends out here. Seconds. That's it. Most people see that and think, nothing happens out there. It's the opposite. That ratio is the edge. Ask why the volume is thin at the top. Not because nobody cares, because almost nobody will pay that much. Not everybody eats at the Michelin restaurant. And at the bottom, thin again, but for the opposite reason. The producer doesn't have infinite apples. Supply runs out. So the second it shows up, the professionals hit it immediately, and price rips back up. Therefore, the opportunities outside fair value are real, but they last seconds. They're not setups. If you need 3 confirmations, it's already gone. Which brings us to the uncomfortable part. Most people don't miss those trades. They take the exact opposite one. So when you open a profile, read it in this order. First, the shape. Fat middle, thin edges. That's a market that agrees with itself. It's rotating. Second, where price is right now. Inside the fat part, you're in the noise. Out at a thin edge, you're somewhere a decision has to get made. Third, and only third, the flow. Because the flow only tells you the truth in the places the shape already said were worth looking at. Most people do it backwards. They start with the flow on a chart where the flow can't answer them. If this is landing, the free academy walks through it properly. Link in the description. Costs nothing. Because there's one shape on a volume profile that tells you a breakout is not coming before it fails. Look at this profile. Fat in the middle, thin at both ends. A bell. A perfect bell. That shape isn't decoration, it's a behavior report. It's telling you the market went to the edge, got rejected, came back in, went to the other edge, got rejected, came back in, all session long. That's a rotational market. It rotates, it doesn't go anywhere. And there is nothing in that shape that says breakout. Now here's what retail does. Watch how logical it looks. Price pushes down out of the zone. The retail trader sees it and thinks, the market's collapsing, I have to go short. And it makes sense, because if the big players wanted to buy, where would they put their stop? Right there, just below. So what does the market actually do? It comes down, it takes the stops out, they start selling, and then it goes straight back up into the middle. They were never in a breakout, they were in a rotation, and the profile told them that before they clicked. And even once you know where to look, there are 3 ways people get it wrong. They go too early, price touches the edge and they're in, before anything has actually happened there. They wait for confirmation. 3 closes, a retest, a moving average. By then the move is over. Remember, seconds. Or they get the entry right and put the stop exactly where everyone else put theirs, just past the extreme, which is precisely where the market goes to collect them. Right idea, wrong 3 inches. Now compare that to the edge where the flow is finally readable, a wall of sells and price stops moving. That's absorption. One aggressive burst and price jumps. That's aggression. Clean, obvious, nothing like the mess in the middle. Same tool, same session, opposite usefulness. Now before you type it in the comments. Yes, there are institutions in the middle, big players using retail liquidity to fill large orders. That's real, 100% real. But look at their horizon. They work in weeks, in months. We're talking intraday. If we hold something for an hour, that's a long trade for us. So it's worth knowing they're there. For what you and I are doing today, they don't change anything. And the second thing you're thinking, sometimes breakouts do work. Of course they do. So look at the shape again. A bell means the market is rotating, but not every day is a rotation. Some days the profile isn't a bell at all. It's stretched, thin all the way up or thin all the way down with no fat middle to fall back into. That's not a market arguing with itself. That's a market that has already decided. On those days, the edge isn't fading the extreme, it's going with it. Same tool, opposite read, and the shape is what tells you which kind of day you're standing in. So, to put it back together, 3 things. 1. The volume profile is a map of people, not prices. Farmers at the bottom, shoppers in the middle, restaurants at the top. 2. In the middle, the chart lies to you. A green candle in there can be a coin flip underneath. 3. At the edges, it stops lying, but only for a few seconds at a time. And that's the rule I'd stick on your monitor. Location before setup. Get the location right, and the setups you already know start working. Get it wrong, and no setup on earth is going to save you. But knowing where to look isn't the same as knowing what to look for. Absorption and aggression have a shape. There are only a handful of them, and once you can name them, you stop guessing at the edges. That's what I'll be going through from here, the other pieces of order flow, one at a time. So if this made sense to you, subscribe and you won't miss them. And if you want this structured properly, from the basics up, the Academy's free. Link in the description. See you in the next one.